Good morning, traders. We're about an hour before the open on Friday, April 25th. Google announced earnings yesterday. Stock had a decent reaction. Markets should be opening a little bit higher. We've got overseas markets up marginally, not up a lot. Some of the overnight gains in the S&P have been erased. So let's take a quick look at the extended hours trading. There you can see the market rallied up on that news, but now it's kind of pulled back to about the level where it closed. So flat open right now. Google should set a positive tone for tech stocks. Let's take the extended hours off because I want to show you the type of patterns that we're looking for. Again, this is your game plan. We don't know what the market is going to dish out for us on any given day. Are we going to get a wimpy initial first move? If yes, then our best trading setup is going to be to fade that first initial move. Are we going to get a decent early move with nice stacked green candles? If yes, then that momentum is going to carry prices higher throughout the course of the day. So let's take a look at those two patterns so that you're able to distinguish them when the market opens. So the first hour is really for evaluation. And you can see how 2 days ago we had this big gap up. This is a wimpy initial move higher. Look at these long tails and long wicks. Look at the mixed overlapping candles. That tells you that buyers and sellers are engaged. That's what causes those long wicks and tails. That's what causes green candle, red candle. Both sides are active. And when that initial move runs out of steam, you're going to get a reversal and they're going to try the other side. Well, that's exactly what happened on Wednesday. So they try the upside. They can't get through it. And then you start seeing some red candles. You break this little M5 upward sloping trend line. You're below VWAP. You make a new low of the day. That's your first opportunity. So yesterday, the market opened flat. I was looking for this same type of price movement early in the day. Buyers and sellers paired off, no real direction. Wimpy move one way or the other. We don't know which. Fade that first move. Well, we get the first hour's price action, and what was happening? Stacked, consecutive, green candles. That's not a wimpy move. That's a nice, strong market move. That is one that we can get behind. And so you don't take a position in here. You've got to wait for a little bit of a dip. And during this compression right here, you can see how we were within striking distance of the prior day's high. I thought that high was going to hold, so I wasn't overly anxious to chase a big move higher, especially when it was hitting this resistance level. So what did I do? I felt more comfortable finding stocks that were really weak on the notion that if the market was not able to get through that resistance level, and if I had any kind of pullback, 2, 3, 4, 5 bars of pullback, that a short position in a weak stock would pay off very quickly. So I looked at Pepsi. Pepsi had announced earnings, and the stock was very weak, breaking horizontal support. So I shorted Pepsi early in the day. Let's take off those extended hour price movements. So I was shorting Pepsi in here when the market was starting to move higher. It was a nice trade. You can see how Pepsi sold off the entire day. I did the same thing a little bit later with IBM. So this rally right in here was caused by the market. The market was in go-go rally mode. IBM wanted to sell off early. It was breaking D1 support post earnings. As soon as the stock started to roll over, this was way before the market started to show any signs of weakness, I knew that this would be a decent shorting opportunity if the market just stopped going up. Those sellers were going to drive IBM lower. It's exactly what happened. And so I took my profits above the prior day's low because I shouldn't expect that the stock is going to fall apart when the market is doing this. So there are opportunities on both sides. It really has to do with what you're seeing from the market price action. In this case, we had a bullish market And in here, you could see how all the gains for the day had been preserved. There was no retracement. So any shorts that you would have been trying by this stage of the game, you had to take your profits. You did not want to overstay your welcome there. Yes, those of you who saw this early move and who focused on the bullish side of the equation and felt comfortable taking trades there, you did really well. You had an opportunity to ride those trades right into the closing bell. So that's how you should be approaching the day. Didn't have a lot of news coming out. We've got consumer sentiment coming out about 30 minutes after the open today. We've had a little bit of a pullback. A lot of the rally recently has been predicated on Trump softening his tone on tariffs. But again, there's some overnight confusion. Trump says he's working out a trade deal with China. China says we're not in talks for any kind of trade deal. You've also got some tension flaring up in Ukraine. Russia bombed Kiev. So Trump is not happy with that situation. Could the rhetoric become inflamed? Yeah, probably. So there's still a lot of uncertainty. Next week is the really big week because we're going to get a ton of economic releases. We're going to get ADP. We're going to get the jobs report. We're going to get JOLTS. We're going to get ISM manufacturing. We're going to get ISM services. We're going to get our first look at Q1 GDP, which the Fed is forecasting to be weak. And then we've got all the other mega cap tech stocks. So I don't think institutions are going to be placing any gigantic bets today, Friday, ahead of a very busy week next week. So I think this is going to be an opportunity to just stick with your day trades and look for opportunities, see if there are any post-earnings plays. Google is going to be interesting because it's going to be bumping up against major resistance right on the open. Take a look at the extended hours price action. 166.57 is where Google is right now. And that puts us right smack dab at AVWAP-E and the 50-day moving average. So that's a major resistance level it'll have to try and get through. If it does, and if the market is strong, it could have a chance to grind its way up to the 200-day moving average over the course of the next few days or so. But I'm not overly thrilled with a stock that has an initial really nice bullish reaction, big gap up, and then it starts to fade and roll over. That tells me that buyers are not quite as anxious as they were earlier. So I think it's going to be pretty tough for Google, especially with antitrust suits being brought against it. So let's see what happens. Maybe that stock hits resistance and it backs off. So watch your pre-open earnings announcements. Get those reactions from after the close yesterday and before the open this morning. There's a real easy way to go in and find out which companies have announced. You go into Market View, you click pre-earnings options. These are all your companies that have announced. We also have a number of searches that you can use in the scanner. So those are going to be post-earnings bullish, post-earnings bearish. That means they reported earnings after the close yesterday or before the open this morning. You know those stocks are going to have lots of volume, a lot of earnings momentum one way or the other. Then you just simply have to pair it up with what the market is doing. Are we going to get a wimpy initial first move, or are we going to be stacking candles? So that's kind of what we've got in mind there. I believe, and I still feel strongly about this, I'm going to be watching for this 550 SPY resistance level to be preserved for the course of the next week or two. As all of this news comes out, if this resistance level holds, that's going to set up a decent short selling opportunity on a swing basis for us. I'm staying fluid. I'm staying flexible. Lots of news hitting. I'm not going to marry one side or the other, but I will be watching to see if this resistance holds, because in another week or two, I'm going to have an opportunity to start entering some bearish swing positions. Thanks so much for watching, everyone. And before I conclude, I am doing shorts during the course of the day. You can see that little tab on my YouTube channel. They're posted to Twitter, they're posted to TikTok. So please watch those because I'm going to try and do one after the open when the dust settles and I get a sense of which way the market might be moving. They're only about 90 seconds long, 2 minutes long, and then I'll post another follow-up to see if that initial impression was correct and what the market actually did after that. So please watch for those shorts, subscribe to the YouTube channel, and turn on your notifications. That way, you'll never miss these updates. Thank you. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.